It's time now for today's strategy session. Earnings season set to kick into high gear. We've got big bank results. They're coming on Wednesday, and we want to get you an earnings playbook with the companies and the CEOs to watch this quarter. Joining us now, we've got Eric Clark. He is a portfolio manager over at Rational Dynamic Brands Fund. Great to have you here with us, Eric, just after the opening bell. Let's start with financials since we have many of them reporting this week. What are your top picks to watch in the sector?
Well, I think the banks will be fine. Goldman should probably paint a pretty good picture, but we're more focused on the asset managers. There's a big trend in wealth management with money migrating from public equities and public fixed income over to privates. And so, those asset managers have had pretty decent pullbacks here, making, some pretty attractive entry points as we head into earnings. I think Blackstone is the first to report on the 30th or the 31st. So we're pretty positive on that sector.
Eric, do you think overall that earnings are going to live up to these expectations, especially when you take a look at tech? Obviously, you have earnings growth expected to cool just a bit, but still much of the market relying on some of that trajectory that we are expected to see and that optimism that's already baked in.
I think we're going to be in the have and the have not category. If you're doing well, then your earnings are going to be good. And if you're not, like Signet today is a good example in the consumer discretionary area, you're probably not. So, this isn't like last year where more and more companies were doing okay. I think it's going to be a bifurcated market with earnings because expectations are a little high going into the year.
Eric, I wonder, from the CEO voices that you're listening into most closely, to give a sense of the macro environment as well as how businesses more broadly could be or should be faring up against what is perhaps a measuring post for their industries. Who are those CEO voices that you believe are perhaps the most noteworthy to listen into this earnings season?
Sure. Obviously the bank CEOs have a good read on the consumer with deposit balances and activity, but 70% of the economy is consumer spending. And so when you listen to Amazon's CEO and Walmart's CEO and Costco, that's about 17 or 18% of retail sales. So that's going to give you a good indication of the consumer and where they're spending, whether there's more discretionary spending that's going to happen this year relative to last year versus the needs side of the equation. Obviously, and then on the asset management side, listening to the CEOs of Blackstone, KKR, and Apollo, they're going to give you a really good read on overall corporate activity. These guys, can see around corners a little bit better because they own 200, 300 different companies, so they can get a good read on wages, on inflation, on growth trajectories, on profit margins. All of that stuff you can kind of make some inferences about where earnings are going to be and what sectors are going to do well and which ones might be a little bit more challenged. So the CEO is, the consumer is still doing most of the heavy lifting. Manufacturing still a little bit sluggish. So we're obviously, listening to the CEOs. And I want to hear more about implementations about AI and using technology to enhance profit margins and free cash flow. And we think, over the last 3 years, if you look back 3 years from now, stocks might not look as expensive as they do today if we get a lot of those operating efficiencies, from AI and technology.